I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. Mixed markets around the world this morning after our markets were mixed yesterday as well. We saw tech weak. The Russell, which has led us higher, seems to be petering out a little bit, and we are still so close to 1700, but not quite there. So do you think we could get there today, Scott?
I think today we probably kiss it. The question is, do we hug it and marry it and move further, or is it just a touch?
Right.
Anyway, it's just the same old, same old. You talked about the world markets. Europe up 1%, China off a little, Japan a little profit taking. So everything's just, running its course. And as far as our markets, it's been running its course also, where there's been rotation from sector to sector. You've had strong sectors take the lead, get extended, then rest. Other sectors play some catch up. And if you look at the chart here of the SPX, you will see that, we are on our way to that 1700. Okay. Hopefully, after this outside day, if you were rolling up some shorts, you traded your way out of them, and if you were looking for a way in, here was your way in at the 100-day. Here was your way in when we bounced off it, digested, and took back the 50-day, and now look where we are. So if you want to take a closer look here, because a lot of people are trying to figure out direction over the next few sessions, here's what you can look at. If you remember the last part of this rally going into May, you had an outside day that wound up engulfing a big ascending channel. So the bears are pointing at this potential ascending channel, but look how long this one went for. So until this breaks, I would not be having short on the brain. And in order for it to break, I would think you'd probably need to close below, I would say 1687 to perhaps 1684, or you see some type of blaring outside day, which we don't have. So overall, if we get above yesterday's high here of about 1698, let's see how we deal with 1700. But there's been a lot more money to be made on the long side versus looking for that cute short.
We'll have to see if perhaps Apple could help lift us today. The stock jumped more than 4% after hours following its report. Now, I'm wondering if this could help change the composure of not only Apple stock, but also lift tech, which has been lagging. Yeah,
lately tech has been lagging because a lot of the earnings coming through have been very short on revenues. But they've had buybacks and they've had some cost reductions. But if you look at the Qs, every single day on the Twitter feed, everyone's saying, oh, look at the Qs. This is a prerequisite for a tech debacle or even a market debacle. But anyway, here was your little rollover here. This was your gap down, couldn't get filled, closing the lows. So today it's probably opening up with Apple. Now the question is, has Apple changed? Can Apple's composure be different this time? And if you look at Apple, since September, okay, you've had a lot of reasons to get out of it. First, I remember talking about when it closed below the 21-day, which this was the first time in months that took place. So that was your first sell signal. Then you had a sell signal at 650. Then you had another sell signal at 600. And then it's just been a trader's back and forth mess since. So here we are at this lower end of the range. Okay, the report to me was pretty solid. You definitely, got a little concerns that they're starting to cannibalize all their own products, but overall, their iPhones were strong, and that's their emphasis, and they should have some new products in the fall. So technically, this is what I'm looking at. Okay, 434. That is the prior peak. I drew this in Morning Call Express. If it could hold above 435 and then have a nice gap and protect the majority of it today, okay, and then do it for a few sessions, I think for a real change to happen, it's going to have to get above 440 and close above it in order to break this downtrend that's been controlling the stock for multiple months. So Brittany, right now, I'm long some calls. I went into it at the end of the day just to be involved because I haven't been trapped in this mess. And a lot of option plays haven't been working because of the size of the premium. So I think a lot of people who did do an option strategy needed to be above 440. So we'll see. But at this point, still has a lot to prove. the majority of that gap has to hold to show demand higher, keep some shorts trapped, keep some longs chasing, and then above 440, maybe Apple, could make a move back to, 500 in the fall.
Oh, wouldn't that be nice? Well, meanwhile, earnings continue to roll in. We had several big reports out this morning, including Boeing. Despite all the problems we keep hearing about that 787 Dreamliner, Boeing's earnings soared. It posted EPS of $1.67 per share, beating expectations of $1.58. And the stock is up this morning. Do you think it's buyable?
Not up here. We talked about it in 2013. I gave a whole plan on how to buy it, even when they were having all those problems, and it's already exceeded every one of my expectations. And you look at this chart, you've had opportunities every time it, here held the 8, and the 21 day. You could have been buying over there. Here was a pretty sharp decline to the 50 day, but it held it, did it again. Now it's at highs. It's opening up at 110, rewarding investors and swing traders. So at this point, above this pivot, I would just be trim and trailing some. I would not be chasing buying, or buying it. Even if it does go higher, you did the wrong thing. You had many opportunities from 75 to 110. I don't want to see you chase it on this report. And short term, the pivot is 108. As long as it stays above 108, this trend stays intact, short term and pent up.
And Ford is also up after reporting a better than expected profit lifted by trucks in China. What do you think about playing Ford?
I also think, your time has passed. It's at 2013 highs. There's been many ways to play Ford along this rally. You look at the chart, it too, you want to talk about trends. This one's been a very, very nice, healthy trend. Here was a nice little buy when it broke above 1450. Another nice little buy when it broke above 16. Okay, now up here around 17, it's already above 1729. I would say if it stays above there, maybe it extends, but if it opens above there and closes back below it, it could use a rest. But overall, I don't want you guys to chase anything. I want you to learn how to buy it when the patterns are building, not when it's extending.
Well, Caterpillar also came out this morning disappointing. It reported lower profit, cut full year outlook. Now, the stock is slightly down. Would you say this dip is viable?
Well, this will be interesting because everyone is such a big Caterpillar bear that it's not down a lot, and that was a pretty big shortfall. So sometimes if it doesn't go down on a shortfall, that means it's washed out. So at this point, I don't know, but I will watch it. You look at Caterpillar here, you will see, you look where the peaks came in way back when, around the 115. It still has been holding major support, and that's coming in right here around 80. Okay, so with that said, you have a shorter term area, so let's look there. Okay, so you take a close-up look at Caterpillar. I would say this is your don't pass line. Okay, right now it's below 85. If it stays below, maybe the bears out there will have some power to bring it down to bigger support. Okay, but if it comes back above 85 and goes higher, they're like, oh my goodness, what do I do now? Maybe the stimulus that's going to be going on in China, maybe the premier saying 7% GDP will be enough, or maybe people just need some kind of big name to buy. So overall, see how it reacts today. If it can't get positive, chances are, you're going to be looking at this big support moving forward. If it does go positive, maybe there's a trade there.
Well, coming up, we've got lots of earnings after the close as well, starting with BIDU, where the consensus EPS is for $1.22. Now, in the first quarter, BIDU grew revenues by 40%, profit by 9%, but still didn't meet analysts' expectations. The stock dropped sharply after. And leading up into this quarter, analysts have cut their estimates by about 13 cents. So what do you think they need to do to really impress?
Well, I think they just need to either beat or meet by a little. Okay, it just had a big move, and we've talked about the strength in BIDU, and there's been a trade there for a while. So you look at the chart, as a bottom feeder trade, this is when it woke up. Remember when it broke above this 95, and then you had that gap on the acquisition, and now it's coming into some decent resistance. So, for my guys, I think they're going to just wait till after the number and trade it afterwards. And if it can get and stay above this 112 after hours on the number, potentially you get another trade. But this is the type of stock you want to do some kind of option play because of the volatility here. I'd say for traders, just wait for the print, and if it can get above 112 and stay above it, your next spot comes in around 120 and then maybe even up to 135. This stock has been out of play for a while. Okay, it's been in a downtrend. It's just starting to wake up. So let's see if this quarter's earnings could do so. Here is 130. And then this was the trend that actually already got broken. So it does have some room if it wants to perform. I think it's definitely something to watch after hours if you can handle it.
We'll also have Qualcomm after the close. This is sort of a play on smartphone demand. Consensus EPS is $1.03. What do you think about Qualcomm? What will you be watching?
Just, you know, you look at Broadcom, it's been a disaster. You look at a lot of people saying that there is a slowdown in handsets, which I don't truly believe. This one, I think, is just, you know, it's a flip of the coin. It's where it is in the range, kind of like when Intel was. It was in the middle of the range, and it was a flip of the coin. You look here at Qualcomm, I don't think anything too compelling. It's not priced for perfection up here, and it's also not priced for disaster down here. So I think there are some Qualcomm fans, and I think, you know, an inline report probably gets it to rally a little bit, and there would be some relief there. So some guys will probably look at it after the close too.
And another big name, Facebook, also reports after the close today. The big question will be how well it's growing mobile revenue, mobile ad revenue. So what do you think about Facebook? Does it just have to come in line to impress?
No, I think Facebook has to beat. It has to prove that, you know, it's worthy of this bigger valuation that people are trying to ignore, but it's hard to ignore. You know, recently we've had a nice trade off the lows there, but you look at Facebook, you look at the, you know, at the stock. You know, it is trying to still build a longer-term macro cup and handle here, where here's the cup. Here's your handle. It's a little deeper than people would want. You have a series of lower highs, high, lower high, lower high. So really, you know, if you want to take some kind of option play, do so. If you remember here, okay, that's when it came out and everyone's like, oh, the earnings are pretty good. They're getting a mobile strategy. It rallied and failed. Okay, now we're right back into that spot. So, you know, I would say above 2677-ish or above 27, after hours, people will try and play this a little bit. Just be a little careful. This is what happened last time. But overall, it's still under accumulation. Everyone loves to hate this thing, you know. But overall, you know, they've been trying at least to do things different. And at some point, it could get going. So I would just write down this level and this level. And I think you'd rather be long it than short it into the report. And you should do that doing options or just wait for the print and trade the stock like we do with most earnings. All
right. Coming up, we're going to go in the trenches with metals and mining stocks, which have been getting some decent follow through. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with metals and mining stocks, starting with the gold miners ETF, GDX, which had a nice gap up on Monday. Continuation yesterday closed the day up almost 3%.
Yes, it's been continuing this bounce off those blood in the street lows. If you remember, in the end of June, when finally at that last capitulation move, you know, I started to pay attention. I'm like, you know what? I think enough people hate this sector enough, and they're talking about such lower prices. There could be some type of reversal, and the miners have been a place that have actually led the metals. So if you look here at the GDX, you will see that was here. Okay, remember this low here, and I wasn't exactly sure, but I remember that Friday when everyone was going out to the Hamptons and doing whatever they were going to do. All of a sudden, the miners were exploding. Okay, and it traded above this 2304. It never made a new low and came above it like gold did. Ignited, came back, held higher, broke above this trend line, and there you go. So shows you how you could pick a laggard group, at least cover some shorts, you know, not be a piggy, and then perhaps trade for cash flow. And overall, you know, you have another gap here. I would say as long as it defends this gap and doesn't close below 2679, you know, you could see it move up to 30. Okay, but overall, decent trade, something to do over the summer, and that's what you look for, something to do. And this has led silver and gold.
And GLD woke up with a nice gap on Monday as well and reclaimed the 50-day. Do you think there's a trade here now?
Yeah, well, this one, it's been, you see the miners go, and typically this has gone the day after or so. You know, if you look here at GLD, we talked about these different technical patterns. This was one of the triangles that could have saved you a lot of money if you saw it at 161 when it broke to the downside, or even this macro trend that wound up breaking here at 150. And then, you know, I remember being short this day. This was a nice payday as it closed really weak on the lows. So if you were following these trends well, you had the luxury of looking at this closely into the blood in the street capitulation lows. And we talk about the red dog reversal. Here it was. went below 115.65, went to 114.68, came back above it. That was your long, nice day-and-a-half trade. If you took it off, great. If you held a portion of it, maybe you got stopped out here. But then again, it never made new lows. And from there, it's been trickling all the way up, and it's about to fill this gap. I'd say if you're not a metals fan or a gold bug and you're using it for a trade, take the majority of the trade off. But overall, it does seem like, there is some commitment. And if you want to continue to watch this to see if there's another trade, same thing here. Watch this gap. The longer it stays above this gap, okay, the higher the probability that it continues to fill this and maybe even sees this, which would be pretty impressive, up to about 138 in the GLD.
And for a while, I know when we were looking at the metals, it was actually silver that was tempting you, and it also had that nice gap up on Monday and is holding higher. What do you think of silver?
Yeah, when that happened that day, I wanted to, try and limit my volatility. So I was like, you know what? I think 17 and a quarter or 17 and 3/4 to 18 and a quarter is a better buy than to sell now. Either look for a red dog reversal or some kind of tradable tactic, or just accumulate. And from here, you'll probably be okay. And it wound up proving so. Okay, from this major decline like you've seen in silver, from these series of lower highs to when it finally broke, big support. If you got out of the way then or here, you were looking down here and saying, wow, this could be a really good opportunity. And this didn't do a red dog reversal. So actually gold was the weakest of the three here, where this, had two inside days. And then once it crossed above 1830, which I remember, because again, I think I was on a train ride, you had a nice move. Then it looked like it was going to go again, and then you had that one day that shook a lot of people out, which hurt, which I was actually long that, and they got a little beat up there. But if you look overall, never made a new low. So if you were just swing trading and said, I'm not getting out unless it breaks a low, you held to some of your convictions, and look where you are now. So now here you are, 2 days above this gap, above 1950. At some point, if it gets above 1989, you can get another trade, and then you see a gap fill up to 2034. So overall, again, not the cleanest action, but something to do, as it's had a nice retraceable bounce.
Or you could look to a stock like Molycorp, which just broke above the 200-day and had some nice continuation yesterday as the stock tacked on another 6%.
Yes, and this one, this goes to show you, I don't like to, actually sometimes I do. But anyway, there are ways to time the market even in broken stocks. And Molycorp, it moves when it wants to, and we tend to gravitate towards it when there's a nice pattern. And 3 days ago, I went long MCP, or Monday, so to speak. Tried it once last week and it really didn't work, but then once China was bouncing and the metals had follow through, you connect the dots and boom, you can make 7 to 8 to 9% in a name, which is what this stock has done in the last 3 trading days. Look at the chart here. And again, not rocket science, okay? This was your igniting bar. What do igniting bars do? They ignite a move. They put it on the map. Then what happened here? It held the top third of this igniting bar, showing commitment. And then right around here is when I started getting involved. Then you added through 725. Yesterday you got paid on your follow through. I still have a little left. And at this point, it's got above this little pivot, and your next level here could be $9 and then even fill in this gap over time. Overall, you look at the weekly chart here of Molycorp, and you'll see that it used to be a high flyer. It's all the way down here. So this is one of your treasures for trash trade. If someone held it during this entire point, you're probably in your trash bin. If you traded it correctly and you use chart patterns and you use stops, this could have been a treasure for you, which anytime a stock moves 7 to 10% in 3 days, it definitely has a shiny tint to it.
Definitely. All right, time for some quick hits. Let's talk Salesforce.com, which is flagging above its 100-day. Do you expect it to pick up some upside momentum?
Well, BMW came out, and they're not exactly the same type of company, but they tend to move somewhat together. This one, we've been trying to look at it above 42.50. Some people are long. Unfortunately, I don't know what happened to me. I got stopped out of it yesterday as I had to head on the road. I was long, and I'm not long it now. We'll see if there's a way to get back involved. 43.16 is that level. It's been acting better. Here is your igniting bar from the lower pivot. Here is your commitment to it. So it can continue higher if it wants to.
And over in biotech, SRPT broke out on Monday, had digested the move yesterday, and held above the breakout level. So would you expect upside follow through here today?
It's got to get above 47.35 and stay above it.
Okay, nice and concise. Dang. We've talked about this one. Saw a nice move off the 100-day support level and is now hovering at highs. So what are the key levels to watch here? I
would say 830, gets above 830, get a little bit more continuation. Overall, it's been a nice move off the trash lows.
Short and sweet. Quick hits. And over in the banks have been doing well. We have Morgan Stanley that seems like it could make 2013 highs.
What's interesting is, I've been long Bank of America for, I think, the last point over 3 weeks from like the 13s through the earnings. I never really hold on earnings, and I did through 14, and then yesterday I sold around 15 saying, you know what, I'm going to take that trade for now. JP Morgan, nice tactical trade on Twitter, talked about it last week, said you could swing this maybe verse 54.5, wound up making 2013 highs. I actually sold it yesterday, even though both are higher, but I traded teams. I went to Morgan Stanley because sometimes you have a good setup, and it looked like Morgan Stanley, to me, is a nice setup. You look here at the chart, and you had a nice earnings report. You had a big gap with no traction, figuring it held the gap, going sideways. I got long tier 1 yesterday. I was hoping to be able to buy it through 27.95. It's opening a little bit above that, but I think there's another trade here. So ultimately, you can pick and choose your time frame, your vehicle, but unless you take your blindfold off, if you're wearing bare shades, you're not going to see them, and there's been a lot of things to see.
There has been a lot of things to see. As we've talked about, it's been a very stock-specific tape. There are things to do. What will your strategy be today?
I want to see how we handle 1700. I want to see if I could actually, besides my options in Apple, get involved in the stock because, there's no premium and you could actually trade it better. I'm going to look to see if the banks have some follow through. Metals, really not that interested in. And I want to see what happens with the Russell. People are saying, oh, look to short the Russell on the open. It's only up with the futures. It was weak yesterday. So see if that takes place. But overall, the trend's been your friend. There's been a lot of quick feet type movement if you want to do that, but even better if you took a step back approach and you're a macro guy and you're just putting monthly funds into an S&P fund or in some of these leadership stocks like you saw with Boeing or even with Ford or with a lot of these banks that are at 52-week highs. You haven't had to knock your head against the wall pushing buttons. You could have picked good stocks, had bracket orders, used stops, and said, let the market pay me. And believe it or not, with stocks at all-time highs, that means the market could be benefiting you. You're not walking around like a zombie or The Walking Dead. You actually have a smile on your face because you're providing a living for your family and you're learning how to approach the market.
There you go. With that said, happy trading, everyone. Have a great day.